Natural gas, right?
Yes, natural gas. You got it. Can take a look. We're trading at 258.9 right now. So natural gas, man, talk about the moves, right? Just backing
Seriously.
it up to Tuesday of this week. We're up at 270, under 260 right now. What's kind of nice here is I took a look at some of the contracts. They line up at 260 being an option that you could have to have bullish or bearish exposure. And, you know, you're within 1 penny, not too bad at all. And I'm going to start off with the 11 AMs. So you have 260 up to 280 or 260 down to 240, right?
Yeah.
Now, we're always looking at these spreads, which are kind of the out of the money or really just not even out of the money, but barely, you know, you're paying premium for these. But there's always the middle spread when it lines up like this, too. If you just want a futures trade with 10 cents of exposure on each side or something like that, just to keep in mind. And that's going to trade almost exactly at market. So,
which is pretty cool.
it is pretty cool. I just pulled it up. You know, for natural gas in particular, yeah, 10 cents is a lot, but it's nice to have when you're about to get inventory numbers.
Well, there is, because there's plenty of folks that even you know, listeners that trade the UNG, and you could actually trade that and just you know, get defined risk period.
And let's just take a look while so this is the middle one. Right now you're trading at 258.97, and the market's sticking at 258.9 by 259, and almost equal because you're almost right in the middle of that spread. Just to pull up.
Which is pretty cool.
Right at futures price, yeah. So here would be your bearish spread at 11 a.m. if you wanted kind of the out of the money. And that one, not out of the money, I should say. The bearish spread has a full penny of intrinsic value, and then you're paying about $7 or 7/10 of a penny in premium. And then your bullish spread is going to be the one that's actually out of the money by a penny under that 260. So you're looking at 2.5 pennies away from that price point. And just to jump to the new ones and see how they line up. The bullish spread, again, a little bit out of the money here. Cost you 8 versus 9, I think, for that extra hour. Not bad, 27.
No.
Yeah, so even call it 3 pennies, right?
Right.
And you have till noon, and you need it away from 260. And then even one last one, because the dailies do line up. Now, these are 50 cents. Your bullish spread cost you 15 as opposed to about 9, which was the noon. And then 260 down to 210. So 4 pennies or $40, but that's a 50-cent spread, and that's until 2:30.
That's huge.
Yeah, 4 pennies seems pretty fair to have exposure on both sides.
Seriously.
For almost unlimited profit potential, as in 50 cents. That's as far as that contract should move in any realistic day, but you never know.
So let me just look at this. Oh, interesting. So got a little pop there at 7 o'clock. You got the spike. Oh, yeah. My take is we're going downtown. Interesting.
Okay.
Just because you see those spikes yesterday, like you had a seller at 220 yesterday.
Okay.
And that's with that low out there is 2.5. It's like 2.57. It's like, how low can you go?
This chart.
Seriously,
anything
man.
can happen when you're trading a chart that looks like this. So
amazing.
Keep that in mind.
Welcome back, folks. So natural gas stockpiles fell 78 BCF, and it looks like they were looking for 82 medium estimate. You
got it. So they're looking for a decline of about 82. They got a decline of 78, so not as much. Jumping back to the chart, there's your natural gas contract. We were trading at 259.5, call it. We drop about a penny on that news initially, 258.48. And we'll check back in and see what kind of action we get. And to recap some of those trades, you know, you were looking at anywhere between about 2.5 pennies to 4 pennies.
Away from 260.
Away from 260.
Yeah.
If you had, and that was having exposure on both sides. So we'll see.
Welcome back, folks. Dow down 119, NASDAQ off 4, S&P's off 6.5. Get natural gas.
Let's check back in real quick. So natural gas, we did get a little bit of an acceleration. We traded to 258. We traded to 261. If you were going volatility-wise, last thing you want to see it do is oscillate around that 260 mark. But the ones we were really taking a look at were maybe noon, 2:30, and as anyone knows, natural gas could have some volatility. We'll see. And gold contract, not a huge reaction on that same S&P in terms of those markets, but yeah, quite a little